Investors and traders, a very happy new year. Welcome to 2026. I hope this year will be even more prosperous than 2025. We'll do a review of the year, how the year went, how did the different asset classes perform versus one another. We'll be taking a look at the S&P 500, Nasdaq 100, the gold market, silver market, and the dollar and the US Treasury. So it might be a little bit of a longer video, so I'll try to actually condense it down. So we'll try to cover as many markets as possible, but because of the time limits, I might not be able to cover everything, but I'll do a follow-up video for that. On the screen, you can see this is a chart which is showing different asset classes, and I've used the ETFs to represent some of the asset classes here, which you can see in the table. In 2025, the best performing asset class was within the metals complex, precious metal, which is silver. Towards the back end of 2025, silver just started to perform really well, and I'll do a special video on gold and silver later on. And it outperformed the rest of the markets, such as the S&P 500, and silver was up 144.6% in 2025. What an amazing performance by the metal. And then the yellow metal, which is gold, also really performed well in 2025, and it was up 63.95%, and it was able to beat the Nasdaq 100, the tech heavy index, the stocks broader index S&P 500, and of course it just blew everything away in terms of the cash and even the bonds as well, including the Bitcoin. So here's a chart of different indices that we like to follow here at Market Chart Pattern. This is sort of our world view of the stock indices for various regions and countries, and what we can clearly see is that the Asian markets, in particular South Korea, Kospi 200, it massively outperformed the rest of the world, and it was up 90.67%. We are looking at the year-to-date performance of the key ETFs and sectors that we like to follow here. Here we can see a solid performance by the ARK ETFs. So these are Cathie Wood's ETFs, which focus on the next generation technology concepts, and we can see really solid performance. The other sectors, we can clearly see the XAR, which is the Spider S&P Aerospace and Defense ETF. What we can also see is that the semiconductors, the SOXX, they also perform very well in the technology sector, and closed the year 40.24% up. Sectors which actually closed the year negative. One is XOP, which is the oil and gas exploration. That was down minus 3.52%, and XHB, which is the home builders, that was down minus 1% as well. So perhaps the lower interest rate environment, which is expected in 2026, could perhaps help recover some of these sectors, such as the home builders, as the demand for real estate and homes begin to pick up in 2026 with regards to the interest rate environment, should we see further rate cuts coming from the Fed. In 2025, we saw the broader indices, S&P 500, give out good returns to investors. Nasdaq outperforming S&P 500, closing positive for the year. But within these indices, there were individual stocks which massively outperformed the S&P 500. For example, if we just take a look at WDC, which is the Western Digital, they make hard disks for computers. And because of the pickup in demand with regards to artificial intelligence and the data center build-outs, perhaps we have seen a big demand in products being created by Western Digital. And it closed the year massively up, 282.31% up. That is a phenomenal return in 1 year for a stock. And on the second number, we have the Micron Technology, which closed the year 239.13% up. Amazing. The Seagate Technologies, the STX symbol, it was up 219%, so nearly 220% for the Seagate Technologies as well. And then we also saw in the communication services sector, the Warner Brothers Discovery up 172.6%, and gold massively outshined in 2025, and Newmont Mining, which is one of the bigger miners of the gold, returned 168.27% to the investors, outperforming the S&P 500 by about a little over 150%. That's a phenomenal performance. And then when we talk about technology, again, the Lam Research up nearly 137%, Palantir up 135% for the year, GE Vernova, again, right from the beginning of 2025, this stock was performing really well, and it closed nearly 100%, pretty much doubled. Tapestry, again, in the consumer cyclical, in the top 10 stocks that we are looking at, it is only the only stock which is in this sector, was up nearly 96%. And again, in technology, Amphenol up nearly 95%. So we can see that within the top 10 stocks which massively outperform the S&P 500, a number of them are actually from the technology sector. And what we can see is we have about 60% coming from the technology sector, and the rest of the 40% are in different other sectors, such as basic materials, which is Newmont, communication services, and consumer cyclical. So where we can see where the stocks that really outperform the S&P 500, they actually were within the technology sector. Now let's talk about the S&P 500. So we'll talk about the markets now. Let's talk about the markets. So we'll start by taking a look at the S&P 500. And what we are looking at the screen is the 33-week cycle. And we have, you can see from these red lines here, we have had key lows come in at certain time intervals. And on an average, that comes out to be around 33 weeks. And we had a really important one coming on the 17th of November. So that low of 17th of November is really important. Let me actually blow it up a little bit right here. And there we go. This is what we are looking at. So let me actually put this right here. And here what we can see is 6,500 roughly is a really key level for us to be watching. And on the smaller daily charts, we'll have a deeper look. But this is a really key level. Should the market take out this level, then I think something else is in play, and we could have seen an important top, and the market could actually try to make an attempt to move lower. But till then, we are actually looking at for the market to reach our higher targets, which I'll show you on the daily chart. This is the daily chart of S&P 500, the cash index. And here you can see we have got two ABCD patterns that we have been watching, one in red and one in black. And we had a higher price target of about 7,015 to even 7,155. But right in between these two levels, about 7080, 7085 is what is quite possible for the index to reach, should we not break the 17th of November lows. So that's really important. As long as this low, this is where we see point C for this red one, is in play, the chances are we are in this ABCD pattern higher. So now the end of year trading towards the end of 2025 has been quite choppy, and I would have thought we could have carried the momentum for Santa Rally and reach these levels, but we actually had a pullback, and where the market closed is right here at the 20-day moving average. So that's quite important to make a note of, and I think we still got a chance to actually make a move higher. One of the things that I would like to point out is that if we just move out to the weekly chart, so this is the weekly chart of S&P 500, weekly chart of S&P 500, and here we can see we have got this really nice channel, which has actually kept these lows coming in October 2022 when this bull market move started, October of 2023, and then we had this massive pullback in April of 2025, and every time from these points the market has actually rebounded. But this channel also has this top boundary as well, and this is where the market is right now, and it is finding a bit of a challenge to actually break through it, and still quite possible that the targets that we saw on the daily chart, it might be able to reach that. So I'm keeping this in mind. We have got this channel resistance as well, but we also have no proper indication that we might have seen some sort of a top. So we'll just go by our key metric of 17th of November lows. So that is what we are really watching, but we should keep in mind that we have got some overhead resistance coming from the channel. Now if we move on to the Nasdaq 100 cash, so this is Nasdaq 100 cash, we have a similar situation that we have this really nice channel formation, right? And this big ABCD pattern, it didn't reach quite to 26,640, which would have been nice, but it came pretty close to it. The high was 26,182, very close. And we had some of the other expansions nearby as well, which is for this entire decline into the 7th of April move. The market has done really well, but just like the S&P 500, it has this channel resistance as well. So just keeping this in mind, for this channel resistance, and over the course of the last few weeks, the S&P 500, the broader index, has actually performed much better. This is the daily chart of the Nasdaq 100 cash market, and here we can see that this market has actually just gone sideways. We did have, just like the S&P 500 cash, we had some upside targets, but this market has been just coiling in this trading range. It's actually a range bound market. Now what we are watching for is, just like the S&P 500 cash, we had some really important lows which came in 21st of November. So that's the exact day. It is the 17th of November week. So as long as these lows are held, the chances are we are in this ABCD move higher. So I'm expecting higher prices. We'll have to wait and see. Should the market begin to break this point C in particular, and then this one, then it's an indication that, okay, perhaps something else is in play, and we might have seen some sort of an important top, and the market could actually rotate lower. But till then, we have to follow our process, our system, and keep on watching for these ABCDs. So 2 points to note: this point C for the red, 17th of December, and then this big one, 21st of November 2025, really important lows. And let's move to the futures. Shorter term, let's try to take a look at what the market did. So this is the Nasdaq 100 futures, and I will move down to an hourly chart. As if I just draw some Fibonacci retracements from this low right to this high, we can see that last Friday, 2nd of January, when a low came in, it came in right at the 61.8% Fibonacci retracement. And if we were to draw an ABCD pattern, let's see how we did. And there you go. It was also a near perfect, in fact perfect, ABCD pattern formation, and we have a 61.8% retracement. And what we saw is basically the market actually making an attempt to rally, and it was on a Friday. Let's see how the markets will perform, but we might have seen a really nice pattern formation. Let me actually try to highlight it like this and this. There we go. And I think we might have seen an important low in place on last Friday, and a pretty good chance the markets begin to rally from here. Let's see how the Monday will close. Let's take a look at the dollar index. This is daily chart of the dollar index, and here we had a really important key level that we were watching, which is 97.50. This is 61.8% retracement. We have this nice ABCD pattern completing right here as well, and thus far it does seem to have provided a good support. However, if we take a look at the market symmetry, this is the previous move that we saw where the market actually next 2 days pretty much retraced all of that to the downside. We are right there as well. So it is within still a bearish symmetric move, and we have to be really careful here. And also right here we have the 20-day moving average. So unless and until it begins to clear this level of 98.60, which is 38.2% retracement of this entire move, the rallies in dollar index, I'm looking at them carefully. However, with the possibility that the rallies could actually fail, and if we go below this level of 97.60, 97.50, then the dollar index has got a chance to move much lower. This is the weekly chart of S&P 500. We had a really big long-term target of around 94, where 94, 94.50, which is this completion of big ABCD. So is there a chance that the market here find resistance, and if we were to move lower, we could see the 94.50 target being filled as well? The yearly chart of dollar index, and one of the things that I want to point out to you is that look, we have had this symmetry there. Dollar rallies for about 10 years back in the 1990s to the early 2000s, and from the late 2000s to the January of 2022, it was approximately 10-12 years. So we have got symmetry in time in the market, and now we saw a big top come into the market. The market is pretty much range bound for the dollar, and again even on the monthly chart, this is actually a yearly chart. Let me actually move down to a monthly chart to make it easier to follow. We have this big pattern completing, which could provide really strong support for the dollar around the 95 to 94 level. So again, could the market get down right into these levels? We'll have to wait and see. This is the daily chart of the US 2-year Treasury note, and we'll be taking a look at the 10-year note as well, long bonds. And here my expectation in 2026 is for the interest rates to move lower, and the 2-year note is really important one, because if we look at where the Fed funds are after the recent cut by the Fed in December, the 2-year note is fairly priced. Based on that, the spread is pretty normal now, and this is why we are also seeing the market just go sideways. However, we have a long outstanding targets to the downside based on these bigger ABCD patterns that we have been watching for pretty much half of 2025, and there is a pretty good chance we could still get down to 3.2% to 3% in the 2-year Treasury note. This is the weekly chart of the 10-year Treasury note, and what you see on the y-axis right here is actually the yields, and here we can see that this market has actually pretty much gone sideways over the course of last 1 month. However, it is also at a critical level where we could see some pretty good resistance come in, and just by looking at the structure right here, we can see for 1, 2, 3, and 4 weeks, that's 1 month, the market has not been able to take out the 4.2% daily chart, and we can see that we have pretty important resistance coming in from the 38.2% retracement, and we have some outstanding targets where we could see actually this market move as low as 3.7%. So again, in 2026, I'm actually expecting lower rates to come in. Also for the 10-year Treasury note. However, we'll be watching the patterns and the charts really closely, and if we have to change our opinion, we're always open to that. However, we do have some outstanding targets from these bigger ABCDs, and this market has just gone pretty much range bound, but also right here hitting the resistance below the 200-day moving average. I think the pressure is on the yields to move to the downside, and we'll be watching for that target of 3.7% on the 10-year note. This is the daily chart of the 30-year long bond yield. We also have this ABCD pattern completing right here. The yields are stronger in comparison to 10 years, expected as well, higher of range very closely, 4.75%. Then I think it's got a good chance to make a move lower, to maybe perhaps even to 4.5%. We already saw this market actually move lower, as low as 4.53%, missing our exact target to 4.5% by a little bit, where we have this symmetry come in, but I think it was just close enough, and then we saw the market rally. But there is a possibility, if this market begins to turn lower, putting pressure on the yields, then we can eventually see the exact 4.5%. Let's take a quick look at the gold market. This is the daily chart of gold. Here, what we have seen is basically a pullback right into a key 38.2% retracement, and this big move that we saw, where the gold closed down 4.64%, or a little over 200 points, was a massive move. Here, it could perhaps be related to what was happening in the silver market, where the CME came in and they raised their margins. But what is really important is that this level right here, we have this trend line, it holds. So the expectation is that we could get into some sort of a situation that we had right here, also something like here, where after a big move lower, the market just begins to consolidate and then begins to move higher. And on the higher target, I'm actually looking for this market to really accelerate between April and 1st of June 2026, and we could see $5,000 per ounce gold actually. So really watching these technicals very in the gold market. This is the daily chart of silver futures. This is COMEX silver, and here in the previous video I had mentioned a very key level where we have really good support come in. So this was a massive move down, where silver corrected down to 15.25%. It pretty much happened in one day, so that's a really fast move. However, and one of the reasons is that we were seeing dislocation between the physical market. We were seeing some quotes within China, and the COMEX was different. And then when the market opened on a Monday, CME actually raised their margins, and that's caused perhaps some sort of liquidation. But right into this key level where we have this confluence of two Fibonacci retracements. So I can show you this one, the red one, and then this blue one coming from right here. One is a 38.2% retracement, and then the other one is a 23.6%. So a pretty shallow move right here. And if we look at in terms of the percentage, we have seen this percentage move before as well. It wasn't as fast as what we saw right here. It took a number of days to reach that. This one was rather really quick and pretty scary on the 29th of December, when the markets opened up after a holiday. But the silver seems to be holding up. So we are watching this level of $68 per ounce very carefully. And just like gold, the chances are it could just begin to accumulate right here. From a momentum perspective, the price remains above the 20-day moving average, is blue line, which is above the 200-day moving average. So the momentum from a moving average perspective, it remains supported. Investors and traders, I would like to thank you once again for watching the video. I hope you found it of educational value. Please do subscribe to the channel, and if you like the video, learn something from it, give it a thumbs up. It really encourages me to bring more videos out for you guys. I really appreciate that. Good luck, good trading, and speak to you soon.